So the month of July has been pretty chaotic. We're going to talk about it. On the screen, you can see here very, very clearly that this is the website. Feel free to check out courses. In terms of chaos, right, the market is kind of a bit iffy and people are buying a lot of courses, which is great to see. Bear market vibes. We tend to be stronger in the bear market because people want to learn, which is good. Talk about a few things, obviously. The CPI. Consumer Price Index, it is due for a new release on the 10th of August, but let's talk about the past. Look at how aggressive this is going up. You can see this very, very clearly. Be careful with obvious bits of news. Don't get caught out with the emotions of it. There could be issues with supply and demand, with issues around the world. I'm going to address that in a minute. But at the same time, that and increased inflation is going to create a problem, a pinch. We're going into the period where summer will be starting to tail off in the next 2 or 3 months into Christmas. That transition of let's spend money, let's enjoy life into we need to save some money is going to be interesting, right? Another thing we need to talk about is, for obvious reasons, let's be honest here, recession fears, right? The gross domestic product, which essentially outlines how healthy an economy is, has shrunk. That's also a problem. But this is interesting because, as you probably know, and what I'm going to talk about in a minute, if you stick around, is prices haven't really reacted to any of this just yet. There's a bit of a lag, and I will explain why. So with this, the US are trying to hide the words and terminology regarding a recession, right? So that's important. They're trying to change it so your mindset is not going to be in fear. When the news articles and the news outlets, let's just talk about the mainstream, novice ones, the BBC, the ITV, the big massive players in terms of the UK, they will start creating fear, and obviously around the world as well, to the masses. People who know these websites are kind of more well educated versus what you tend to get on your normal TV, because they're looking for this sort of stuff. Now that is going to be interesting. Right now, unemployment rates are at low levels. That could go high. That could turn around. If people start talking about it in the news, there's more fear, companies will tighten their belts. That is a problem. So just hold on for a second with this. This could get spicy in the next few months. Another thing we need to talk about is obviously the points. 75 base points for the second time in a row. I was expecting 75, but there was always a possibility this time around that it could have been 100. Why? The FOMC in September, and is the next meeting. There's no August, right? Literally we've gone from this to nothing for a long time. So a good 6 to 7 weeks that there's been a bit of a gap there. Huge importance. Let's see what happens. The reason why I say that is because the next CPI print is going to be very, very important. They are forecasting an 8.9%. Will it happen? Probably not. Unlikely. Will it be probably about 9%? Probably still there. At the end of the day, yes, oil has came down and stuff like that, but still there is increased spending, and that will increase inflation. So what else has happened, right? Earnings. We've had a lot of earnings. Now this is from the last week or so. This was like the big one that we've had. So you can see here we've had Microsoft, Google, Facebook, Apple, Amazon, right? We've even had the likes of ExxonMobil, which have the gas companies around the world, BP and stuff like that, have been absolutely smashing it because of those increased prices. But what else is happening around the world, right? These were relatively good. We were expecting them to be good because the market was relatively okay. The reason why I say that is because people are not really feeling the pinch until recently with inflation. Obviously, this is lagging data, so just be mindful of that. The next one could be more interesting, right? What else is happening though? This is relatively recent. It's just coming out, but obviously covering it on this video is important. There is a lot of tension between Taiwan and China. Now, I mentioned it yesterday or the day before, certainly on our videos. There's problems here because Taiwan is quite a big semiconductor, creator. They create a lot of semiconductors, which is essentially are processors in all your technology, all your cars, all kinds of good stuff in terms of AI and all kinds of good stuff in terms of machinery. There's a problem with sand, exporting of sand, and that could be interesting because that's what is one key ingredient. I mentioned it before, supply and demand. If inflation is high and supply and demand of certain materials, certain things are going to go up in price, it's going to create even more of a pinch. So just be careful with certain things around that. Certainly when we're looking at technology, there could be a backlog of certain things that we're waiting for. Again, we've had that recently. It caused a problem. What could happen next? Well, we could be on to the next dose of it. In terms of crypto news, right? So obviously all of that, what I've just said, could affect crypto. Why? Cryptocurrency is one of the most liquid markets in the world. You can get cryptocurrency, you can exchange it for cash very, very quick and easy, much faster than a traditional broker. If people are underwater with longs, over leveraged, overbought, whatever, and the market does come crumbling down, get words out, we could have issues, right? So just bear that in mind. What's happening elsewhere? So this is just, I'm just using Cardano here as an example. Cardano is a great asset to monitor buzz, hype, bit of greed as well, and fear. Now, the one thing that you can see here is the Twitter and trading volumes for Cardano are at 6-month lows. Now, this is obviously, from a week ago or so, but I've noticed that myself, right? We are currently building, a lot of new content for the YouTube channel. Feel free to obviously subscribe, check it out. But we're building a nice little content library. The views are relatively low, right? You could probably argue that. But they're also my personal channel, relatively low, and same with Twitter and elsewhere. It feels like a lot of people have left crypto. It feels like a good percentage of people have been shaken out. I do think there could be more people that will leave as well before it kind of does become rosy. So just be careful with that. Often people address and look at prices as a way of getting in or a way of getting out. Often they don't look at the fundamentals. Nothing wrong, in my personal opinion, of Cardano, but it's just the way the market is. A lot of assets are down 90%. A lot of assets are down, big cap coins are down about 60%, right? So that's a big problem. People will not want to stick around for that. So when we're looking overall at the market, what's happened? We've had a bounce. We've had a historic kind of run on a lot of altcoins, but ultimately we're still in a downtrend. We're still in a bear market, which we will talk about. So let's talk about in terms of chart and analysis, right? This is an interesting chart. This is from this daily swing here. So if I go to the daily, it's from this dropping point in basically the end of May to where we kind of fall into, which is technically the local bottom, not the full bottom. We can't confirm that just yet because realistically, I don't think we've tested it enough. And we are rising up, but what has happened here of huge interest, and you can probably see that very, very clearly, we have hit the 618 level perfectly. On the 3-day time frame, we've not done an EMA crossover, which is kind of an important factor. But at the same time, though, yes, we are having a relief rally. It doesn't take much to work out that we've had these before, and it often comes back down in the bear market. Reason why I say that is because we've lived it in the past. If you go back on Bitcoin or whatever you want to look at, you can see these in very simple detail. Basically here, right? So you can see this. This is a previous bull market. Pull back, bang, pull back, bang, pull back, bang. And there was no reason for you to jump back into this market realistically because majority of the time you were forming these lower highs. Not good, right? And realistically, what are we doing now? Well, we're kind of at that same point with these massive lows, these deep lows, but obviously it looks worse because, let's be honest here, we're falling from a much bigger height. So let's just see what happens. If this rejects, right, I'm just going to put this point out there. If this rejects and we do fall down to these levels, you were warned, right? Put it that way. So for me to get bullish, get a big crossover, get a big massive run, and we've got to be above this level realistically, right? It's always good to know that. It's always good to know where the levels are, but it's just hard work. It is hard work keeping an eye on it. If you can hear a really loud thing, someone's cutting grass. It's very, very loud. Apologies. So that's a total market gap, right? What else has happened? So I mentioned before, throughout all this period, we've had a little bit of a bounce, even though we've got recession fears, even though we've got more base points as a hike, historic levels. We're above certain periods where we've never had before. Bitcoin to me doesn't look very strong at the moment, right? That could change. Versus altcoins, it's kind of went, okay, I'm a little bit moved, but not much. Not gonna go too mental. And it just looks like a really classic bear market. And you can see on the daily, it's trickling up slowly, but there's no real oomph to it, which is kind of the problem that I've got with how healthy is this market. And that's where I want to talk about it, because when we're looking at the overall market, right, let's just look at, obviously what's happening here. Is it healthy? Kind of ish. But what about the dollar? The dollar is still relatively strong. Yes, we've obviously had a nice little pullback here, but when we're looking at like the 3-day time frame, we're still holding above the EMA 8. We're still holding there, right? Could well fly right the way back up. The dollar is a huge important indicator for that. Now, other things to look at as well, for obvious reasons, is the dominance chart. The dominance chart of obviously BTC is great, but the dominance chart of the US, you know, the US market, the stable currency market, is brilliant, right? You can see here very, very clearly that we are looking to do a crossover on the 3-day time frame where we're potentially going to go and potentially go lower. Going down is always good for the market. That means it's strong. That means that money is going into the market in terms of stable currencies into open positions. If it then turns around, which I did mention recently on one of my videos on learning crypto, this could be a real interesting level. If we bounce off this and continue that trend and carry on going up, it would indicate one thing and one thing only. A lot of altcoins have hit resistance, they've failed to get out, and money is getting taken out the market into profit bags, right? So that could be a problem. When we're looking at the likes of Ethereum, and like, oh god, this is old, you can see how we've kind of done this massive daily swing, a weekly, actually like a weekly swing to be fair, into these levels, right? In between this extension level and this extension level, right? We're obviously bouncing back up. You can see that it's very, very clear. The big thing you got to look at though, where do we go next? Well, you can kind of see this very, very clearly. We've got this swing high to this swing. Are we going to go to $2,000 potentially? Have we already stopped and turned around here at this level? Potentially. If that is the case, we could be just going right back down to this neckline again. Could be quite an interesting point if that is the case. So when we look at the overall market, yeah, it looks pretty ugly. It's not great. If you're a new investor and you bought up here and you're currently sitting on your assets down here, the trick is get educated. The trick is buy as much as you can if you can without going too much into your risk to try and get that dollar cost average down. Because if you, let's just say here, just as a bit of a point, your average purchase price is here. Your aim is to try and bring this level down as much as you possibly can. Simple as that. And that is where people are going to get tripped up, I think. Bear market rallies will humble you. If you're buying right here, okay, it's not a bad place to buy if you bought at the top, right? If you bought at $4,000, $5,000, or nearly $5,000 on Ethereum, and guess what? You want to buy more because you think that, oh, my order's a bit bad. I've got some extra money. I can put some in. Okay, you'll bring it down a bit, right? However, it's not great. If you bought, you know, quite heavy here and you've got nothing to fall back on, just be careful because we could go lower. If we do go lower, you're going to feel the pain because, again, percentages are relative, right? If you buy now and we go back down to these lows, it's a 46% loss. Ooh, it's pretty bad, right? So just remember your risk, right? As I say, courses are down below if you want to learn. Now, let's talk about one final thing. Dominance again, right? The one thing that we've got is Ethereum Dominance is doing pretty well versus obviously Bitcoin right now. You can see this very, very clearly. It's increasing pretty significantly versus BTC that's dropping, right? So there may well be some nice little returns here. As I say, down is good, up is bad. Now, why is this interesting saying that up is bad? It's not bad in a way, it's just showing you that Ethereum and altcoins are stronger. Therefore, if you were holding a lot of Ethereum pairs or if you bought in Ethereum, you'd probably be a little bit underwater versus what you would be in BTC right now. The market is moving favorably to altcoins at the moment, but that could change in a flash. So just be careful. As I said before, if this goes up, money's going to come out the market. That could mean that BTC dominance could bounce, right? And when we're looking at this level here and this whole region and where we are roughly, if I put a big box around this point here, just to give you an idea, there's a lot of stuff here. There's a level here. There's some rejections here. There's a little level of rejection here. There's support here, support here. Are we going to find support? If we are going to find support and we do bounce off this point, it would be a very good indication that the market is healthier than for Bitcoin and profit is being taken out of the market and probably put into Bitcoin and probably put into, guess what, USD. So if that is the case, we will probably see this go up as well. So right now, when we're looking at Ethereum, when we're looking at Bitcoin, when we're looking at all these stuff, we are at levels of resistance right now. On a lot of things, we're at levels of resistance and we're struggling to get up. If obviously we do break up, that will be invalidated. The market will obviously, in terms of the dominance pairs, will drop even lower, which is good, right? But right now, is it the time to just ape into the market? No, definitely not, because we're at levels of resistance. If this drops low enough, fair enough, right? You buy and support, that's key. But aping in at these tops here and going, oh, we're all going to make it, we're going to make money, it's kind of important to note that. Look at every single altcoin right now. We're at levels of resistance, and we have, ignore the noise, we have rejected quite a few times off these, and this has created a lower high. This is not great. So there's a lot of things to look at. There's all kinds of information out here which is interesting to look at. But hey, it's up to you.